Hey everyone, this is DayTraderRockStar, and this is the high probability watch list for the week of July 21st. And we're going to jump right into it. An amazing week, and we're going to continue with that. The setups last week were fantastic. Coming into this week, let me tell you right now, just to give you a thing, you got to get some great stocks for next week. But you know what was even more impressive was the action in the market. We left off last week, started off last week, I should say. Left off and started off talking about this rising wedge in the market. Now, I am, at Day Trading Radio, I deal a lot with technicals. I am definitely a chart person. I understand the charts. I understand the momentum, how everything is working out. And I've seen these patterns work out time and time again for the last, God, how many years is it? Going on 20 years, And say the first few years of my trading, no, I really wasn't into technical analysis. I probably started off like a lot of other traders, following chat rooms and bulletin boards and trying to find my way through the markets, reading on tons of books and stuff. And then what happened over years is I learned how to lose money. And then what I learned is not to do those things again. And then I started realizing that certain things do work out, and we want to wait for those things to happen. And that's how Day Trading Radio has evolved. I mean, there's no doubt about it. I think everyone now is on board, seeing the setups that I bring each week. I am kind of proud. I'm kind of proud to talk about these setups. I like them. I feel motivated each week. You feel the passion in my voice. This is what we are. We're traders. And we don't want to trade crap. We want to make money. So as long as we're making money, we're feeling pretty good. And it was tough going into this week because this week really defined a market that a lot of people were looking to move higher. And it was hard to, go against that. I wasn't 100% going against it. I understood that we had a nice little flag here. And I understand that the Fed is behind this market 120%. So it's very hard to bet against the market. It really is. And I'm not saying I'm doing that. But, when I noticed that we had a coiled up stochastic area up here, it was really key for me. It was like it's something we could scale out to, and we haven't seen this. Throughout the last 2 years, I've been focusing on these flags that have been playing out. So the timing has been great in this market. Flag, oversold, flag, oversold, flag, oversold, flag, and continue that process. Then all of a sudden we start to go into this ramp, and we start to see that we're getting these higher lows on the stochastics. And this is typical of what we call a coil stochastic, what I call a coil stochastic, a day trading radio exclusive type of setup here. And really it is a timing play. So when you get coiled up here, there's usually one direction to go, and that's to drop down. And this coil stochastic usually defines itself or has an underlying pattern that represents this action too. So in this case it was kind of a rising wedge. And we know that the rising wedge also is a kind of a bearish pattern, but you have to understand when to trade this. There's a certain level that it becomes a high probability setup where it normally breaks down, and that's between 65 and 75% into that range. And I talk about this on many videos, especially when we come out with those videos. It's just kind of pretend this is the wedge pattern, and the wedge pattern, if you push two lines together, eventually they would come together. But we don't want the price to get up to that level. So we consider this, the beginning of the pattern, right here. This is really the zero mark of the pattern. This is the 100% mark of the pattern right here, the end of the pattern. You cut that in half, it's 50% of the pattern, and you cut that in half, and it's usually 75% of the pattern, give or take. I'm just doing this fast for you. So once you get into that 65 to 75% chance, that's when you look for this pattern to break down. So understanding that and understanding that flag, we looked for the beginning of the move to be a positive move in the week. And that's exactly what we got, a positive move in the week. And then we're going to watch that 60-minute time frame and watch for a failure to come into the market and kind of turn us back down. And you know what? The bad news that came in this week helped the situation. Now, it becomes, after a while you wonder, you don't never want bad news to come out, especially the news we've been hearing lately about this plane being shot down and everything. I mean, it's terrible news. It's almost, being in the markets and being a trader, and you hopefully can relate to this, even though it is shocking news. We hear about this news so much through media, you almost become numb to it. It's like planes are disappearing, people are dying all the time, and it's just constantly put out in front of us. So we become numb to it. And normally, where I think an event like this is a real sad event, the market actually reacted to it a little and then came right back and it absorbed it. And it's not like something that really affects the market these days, because the market has this underlying protection that the Fed is putting out there. So it seems like the bad news is always an opportunity until it's not. So, with that behind us, we had that 60-minute time frame set up perfectly. We came out of the flag. I said, watch that 60-minute. We got up here and we looked for that rollover. And we got the rollover. And during that rollover, we had these events. We had the plane being shot down. Then we had the invasion, Israel doing a land movements into Gaza Strip. And, this caused some pressure in the market. But what that brought us is oversold on the 60-minute time frame again. And just like a textbook thing and saying the market's not really even worried about what's going on around us, it's really worried about how the settings are setting up. We got oversold. We came down to the 200 to the penny, and we bounced off of it. That just does not happen. And if you just think that's a random event in the market, it isn't. It's more than that. And to recognize these levels, to recognize this underlying trend line, to recognize, the oversold stochastic, the underlying 200, and this level becoming a very important level. So we ended up, even though we had a great trade, we took the VIX, which was a kind of a trade expecting the market to kind of break down, volatility to spike up. We got that. We took that off this morning because of the 60-minute time frame. And then you see the VIX spike back, or the market spike back up, causing the VIX to drop. So a great trade there. Great trade. And now we had great trades, and we're going to continue to do that. But just remember, they're based off of these lines. You can have an opinion on the market. You can have an opinion on the world, and the world events and your governments and stuff. But the fact is, if you're going to be a successful trader, you have to trade the higher probability zones. It's the only way that to really possibly hang in there as a trader, because, the market is set up to kind of make you believe one thing and do something different. These levels continue to play out, and that's my job, is to bring these levels to you, and I'm going to continue to do that. So after a week like this, which has been tremendous, with the news, with the breakdown of the wedge pattern, and the bounce off the 60 and the push right back up, and the shorts working out. We did have a short that got squeezed out, but most of the shorts working out, the longs working out. I'm excited to bring you this next watch list today, and I want to start it off right now. So we start off with looking at the hourly chart. And you can see, we did pull back on the 60. We bounced aggressively, and now we're into the weekend. And, the first thing I want to tell you is, going into a weekend and after events like this, you don't know what's going to come out. There's going to be, you just don't know what's going to happen. So there's always that risk to the downside. So understanding that, and understanding that the 60-minute time frame is getting back up there, this, there has the possibility of a pullback. And I've seen this before. If we take a look at the daily chart, you're going to see two big candles. You have that big down candle and a big up candle. But we haven't broken it back above yesterday, or basically yesterday's, or that big negative candle. We haven't broken back above that. And that, in situations like this, it's not out of the question to get another candlestick, just pointing back down, pushing back down and kind of tightening up this pattern a bit. Not saying that's definitely an option. The overall pattern still lingers above me, saying that this wedge pattern, started its breakdown and got the first retracement back up based off the 60, and now we could actually rotate back down. So I'm kind of on the, wish we had a little better setup to make that call officially. I could really understand why the market's moving higher, and I could also understand why the market could move lower off of this. Small hedge just in case we move down, but I would say my bias is a little to the upside now, because the market is showing this strength. And again, a plane, you hate to say that the plane crash, the attack in Gaza, these things are just not affecting the market. So you have to go with more upside right now, and that's what it appears. The market is showing that type of strength. And I hate the person to say, well, the other side of the coin is, we're getting overbought. So we're kind of in a, me. If I said it was everything, all the signs were lining up for a bounce, I would give you a 3-hour up day. If all the signs were lining to about, moving down, I would give you a 3-hour downside signal. This is a little different. It's just a little different the way the markets are acting. We're overbought on the 60, which is negative, but the market extremely strong in these events. And 2,000, a big psychological number, still above us. I think we could actually go both ways, and I'd be happy with a move either way, as long as we could define it and really, kind of confirm it. I want to see a good pivot area down. I want to see this cross back over, and then we can start to really work off these real trends that are starting to play. tomorrow, started off on Monday, slight bias to the upside, just because of the strength, and taking there's no news, no additional news that shocks the market, maybe a little further relief rally. Again, that's just it. The stocks on the stocks, all right, the stocks you're going to be seeing is a different story altogether. Got great stocks for you. Got 3 best bets for you this week. We're going to kick it off. We got so much to kick off today. It's going to be a mega awesome watch list. I hope you enjoy it. Let's get it started right now. First thing we need to do is start off with some of the trades we started off with this week. Monday, first day of Monday, we had Tractor Supply Company coming out and warning. Now, believe it or not, I was in this trade. I did think we were going to move up a little bit higher, but we actually had this trade in what we call the high probability, watch list, basically. And it's based off, of course, the major pivot areas, this underlying pivot causing a 1, 2, 3 pattern, and this tight trend line causing the X marks the spot. A very powerful, one of my favorite playbook plays is where 2 intersecting trend lines meet. I want to show you some great examples of that this week. And this is a playbook play, and remember, you get that on the forum. If you go to the forum and you go to the top part of if you sign into the site here, let me sign in here fast and show you again, because I know there's been a lot of new members tuning in lately, so I just want to make sure everyone's up to date on everything. So here you just tuned in here, and you go up here to the playbook tab up here, and these are most of the playbook plays that I trade off of. These are my setups, and the X marks the spot right here is the latest one, X marks the spot trade video, which basically breaks down the trade for you and everything else that comes along with that trade. So let's go back here now. We're going to just take a look at the Tractor Supply Company, because this was one of my favorites. And what happened was, we got in it a little early, when I put this out, because it was a great pattern looking for an upside move. And we started getting that upside move, and then they came out and they pre-announced earnings and lowered their guidance very slightly, which was, wasn't a big thing. So when we opened up, we actually opened up right down in our zone. And at that point right there, we had a perfect opportunity for people to really take advantage of this trade. So bang the table here, and off to the races it was going. And you could see the results from that. We came right down to, we gapped right down to it, and we moved right back up to our profit zone. A textbook X marks the spot, even in the face of bad news. I mean, who would have, you think about earnings, you think about guidance. When someone comes out and guides lower, you think that's bad news. But look at the opportunity you had here, because it's a recognizable great pattern. The X marks the spot trade really defines that area where 2 intersecting trend lines and 2 channels intersect, giving you twice the amount of support here on this in this buy setup. So again, plus you're oversold, so everything was lined up perfectly for that. Just a great setup. We took profits on that. Now we happened to catch Deutsche Bank. Deutsche Bank we caught again, and we had a nice trade on it, and we took profits on it. It was very important to take profits, especially you see a fast rotation from oversold to overbought on the daily, starting to run out of steam. It actually looking good, probably going into next week. It's making a little mini flag. But we'll probably mention that and follow it a little bit closer next week. But we're out of that trade. But a good trade, just a review of that. Got into that because we were closer to this trend line. We're oversold. There was some earnings coming out on some banks, and really it was it's just everything here seemed fine on this. It was a good risk reward trade basically. So we took that and we got it. All right. Last week's there was kind of 2 contenders for the beer trade. It was Visa out of this flag and Dunkin' Donuts, and I think I wanted to really consider them both a dual HPS or a dual beer trade. I ended up switching over to Dunkin' Donuts last minute. But you can see I did also do the Visa trade. I took Visa before this and was holding this into this flag. So once we got that pop on Visa, we took a nice profit on that. All right, so basically, just a nice, about almost 5 points on that, I think it was. And it was based off of this, it was just a beautiful flag. It was a textbook flag. It was one of the best bets. And again, you can see a lot of the trend lines. I pay attention to the flags, the underlying trend lines, the pressure, understanding all these things. Simple concepts, not that complicated, but really disciplined and works well. So great trade and out of that one. We decided to take the FMC, and we took it on this day. It was just a pretty decent level down here. And the next day it gapped up, and we took it off the table. It was basically a beautiful setup. We were in it one day, overnight basically. Bought it the day before, sold it in the morning, and it's actually pulled back since then. And we're looking at getting in it again next week. So we'll call this the first setup on the HPS setup. And again, just to kind of review that, this was these are all outlined for you on the HPS site, and we're going to show you that right there. This was the alert that went out. Basically, we're looking at a buy zone $69 to $68. Everything here defined for you. Look, price came right down to that level. We took and we bounced and we hit our profit zone. It hit 70.50. We took it off. You get that instantaneous real-time alert, and we took it off. And from that point on, it sold back. But I'm willing to actually get back into this one. It had a nice engulfing pattern today, which is one of our candlesticks we look for in this scenario. So I'd actually think that we're moving back up here. So we're going to actually leave this active because it's right in its buy zone right now. We're going to leave it active, and I'll re-trigger this. I'll redo the profit zone so it's no longer triggered, and we'll keep this on right now. Remember, there is a little underlying trend line. I actually will try to move this stop down just a little, probably to 66.50, just to give us that little chance of that trend line retest, because that was where I really want to always get into. But this is an engulfing pattern, oversold. This looks really good for upside. We'll call this active right now. We'll reset the profit zone, and we'll move the stop down to 50 cents. Now, again, whenever you look at the the watch list, the first thing I do Monday's usually a bit busy for me. If we're in a really good area, sometimes I'll start my positions just so I'm in it. I trust in the methodology, so we're usually pretty good. But also, pay attention to the market Monday. We want to see what kind of news it is. You don't want to be blindly going into the market. If there is downward pressure, this might gap down. You might want to always watch for that reversal candle. There was a beautiful reversal candle here, and as you can see here, there's a little reversal here. Had a couple days up day, so this is pretty decent. I love to get those tails, take out the previous low, close on the high. So this is a pretty decent candle right now. And I would expect some more upside on this. First target on that 670, 70.50. So we have that in there. All right, no problem on that one. All right, here we have Cummins, CMI. CMI is another trade we took this week. We got in it and got out of it quickly. We had a nice little push to follow through up to the 20. I was just feeling, again, I felt that the overall rising wedge in the market was a little unstable, so I decided just to take that profit, move on. But just let's kind of go back to this because it is a textbook nice little flag here. It's oversold. We're kind of embedded. It's not, for some reason, it's not my favorite yet. It's not my favorite, but, and I'm not going to put it on the HPS watch list, but I am going to watch this underlying trend line, and I'm also going to understand that we haven't had there is a little consolidation here. There's a little ledge here. And lots of times you'll come down here just to take that ledge out. So there's really two cases here. We could actually consolidate here, start to move higher. But if we actually saw this ledge taken out and a candle come in like this, a big candle come in, I'd be more looking at buying this into weakness instead of giving it the chance to show me that weakness. It looks great. It looks like a textbook flag. It's probably going to be a flag. It's probably going to move up. I'm just going to wait for it a little. But it was a trade we took this week off of this lower trend line from here to here, and it worked out fine. Here was the short we had this week that got didn't hold on to the short. There was news out. UNH, United Healthcare, came out of their earnings. This was actually going to look pretty good. But again, market strong on this. Pushed this one out, ended up taking a loss on this. And that was a short. And again, very hard market to short in. Very hard market to short in. So it's not the best trades, but we did make, we talk about the other shorts we've had, and those worked out great. So, AAP, nice breakdown. This was a textbook. This is exactly what we look for. Underlying channel, the coil stochastic, rising coil stochastic. The breakdown represents a breakdown of the channel. It's a textbook, call it stochastic channel breakout play on the playbook in the forum, like I said, and this one worked fine. Today we talked about this being oversold on the 60 and to look for that bounce. And you can see we kind of got oversold on a 6. Little bounce. I mean, we took profits on this. What did we get on that? We got AAP here. About $2, $2.50, $2.20. Got $2.20 on that. That was pretty good. Great setup. I mean, look at that setup, you know, and then look at the markets and understand what the markets were doing, how strong the markets was, and be able to take a short in a stock like this because we recognize this coil stochastic. This is why I took that short. There's no other reason other than this coil. And we understand that sometimes you're going to get that flag, that bounce, and that failure. So understanding the bounce, announcing that short, and seeing that failure come through, taking profits, understanding the 60s, getting oversold. Just, you know, I think it was a perfect opportunity and one of the great examples of the coil stochastic. We left off with a candle here, and, you know, again, not really focused on any trades right now on this one. AMCX. Took this one off this week. It was a stock I was holding through this consolidation. I was waiting for it to pop. Probably going to head higher. There was definitely some news in Time Warner. And, you know, it probably helped all the media companies this week. So we had a little help, and when we get a little help, we usually take that as a good reason to exit. Underlying channel happening right now, so something to pay attention to if you come back to it. But I'm out of this. Probably not going to look at it for a while. Because of the rising wedge, I decided to get back into the VIX the last couple days, and boy, did we have a couple good trades on that. We took 2 trades. Yesterday we took a trade on it, got about $1.30 on the VIX, and it was weird because this whole week we discussed the possibility of a VIX spike, just looking at the time frame between the VIX action here. And it was about 4 months on average that we got a move, and then we're about going into 4 months now. So we're just saying, all right, you know what? Let's you know, we have that wedge pattern, a rising wedge in the market. We have that falling wedge in the VIX. Typically, this is a great combination for a break higher, and this might be the beginning of the move. I mean, the VIX is an interesting trade because when it does move, there is volatility and something severe happening in the market, it can really move. But if it doesn't move, there's a decay in it, and it will slowly decay. And you know, the more time goes by, it doesn't just flatline here. You'll start to lose value in it, and eventually you'll reverse split it, and you'll just be holding a mess. But again, we're still starting to focus on the VIX a little. I ended up taking the VIX a little at the close, just to kind of a little hedge into Monday in case bad news, but not planning on holding that. But that's an interesting move, and we actually nailed it. We held it overnight. We also took profits again today on it. So I mean, that VIX trade came in handy as a little hedge, and it worked out good. Google, we took Google off into earnings, and it did fly out of this flag. It was a beautiful flag, beautiful flag, pop out of earnings. Still looking good, aggressively strong with the rising stochastics. And at this point, it's just kind of out of our buy zone. And you know, I have a kind of a rule that if we get a gap up and we have a significant gap that gives you a nice profit, you lock in profits because the setups are going to continue to come. You don't have to worry about that. But the profits, they're never guaranteed. You know, markets can change on the dime. There's events. So when you do have an opportunity like this to take profits, we take profits. So that's that. And another VIX. So that was basically a recap of the trades. Now we're going to take a look at some setups going into next week. And you're going to, I mean, these are still great setups. I don't even know where to begin because almost all of these are best bets. So let's just start off with this list. Do we talk about the OC? OC here, Owens Corning. Did we put that one up yet, Did we put that one on yet? OC, did I get that one up yet? All right, I didn't get that one up yet. New position this week, OC. And again, based off of... all right, so taking a look at Owens Corning, OC. Took an early entry on this just because, you know, I like the name. I like where the 200 is in relationship to this this chart. Yeah, some interesting examples of some recent HPS setups on this. Of course, the 1-2-3 pattern and that push back down to the trend line underneath 200. We call it the 200 EMA breakdown, channel line bounce. And again, we're coming back down to this channel line, and we're off of it. We're just off of it a little. I like that we haven't tested the 200. I like that we have a gap up here. I like that the 200's above us. I think there's a good chance for a move back up. First thing we want to talk about is earnings are going to be out next Wednesday, the 23rd. I have to check on that if that's going to be before the market opens or after the market opens. I don't have that in front of me, but that could definitely affect the stock. I set this one up as an alert in the HPS setups just because I think that trend line is going to be key. And if we do come down to it, this is what it's going to look like. So we have the buy zone in here, 35.80 to 35.20. And again, when that gets triggered, it's really up to you to see if this, at that point, we'll see how the markets are doing and how, again, so close to earnings on this. That's the wild card right now, is because that earnings here, 34.50 to stop and target profit zone. I'll move back up to the 20-period moving average and possibly up to the top part of this gap here, this first gap. There's a bigger gap up here, but I think we can easily get some upside on here. So very high probability. Good setup there in Owens Corning. And Thursday morning, Dawid said. Wednesday morning. Thank you very much, Dawid. So just consider that. Now we have Carnival Cruise Line, and really another textbook pattern. We have that big 1, 2, 3 pattern playing out to the upside, and a big rotation back down. We bounced down and really made this bigger channel, and almost off of a double bottom. We'll consider this a kind of a double bottom. Nice candlestick back here, which really defines itself as a good level to watch. And here we have a very close touch to that level. Decent upside today. The downward channel looks pretty good. The 200-period moving average. This one usually is a key on this stock. It trades around a lot, so every time we pull it back through it, back underneath it, we push through it to the upside, back down to it, under and above it. So we're back down underneath it. There's a good shot that we actually come out of this channel to the upside. It's been chopping around. I think it's a decent trade, and we're currently in that. It's just a 60 minutes seems to actually be embedded here, and this could be positive. And I'd say, even though we don't have it officially as a short-term HPS setup, the first area of resistance would be right around that 37 level, and then depending on where we come from there, 37.18 is that trend line, give or take a few pennies. So not a bad, I think there's still upside here, and I think it's a decent trade. So, all right, here is one of the best bets for next week. One of 3 really great setups in the market. Brinker International restaurant stock. They hold a catalog of restaurants. Nice 1, 2, 3 pattern. A little breakdown through this pattern, which is okay. I mean, I've dealt with this type of setup before. Normally, we push right back into that pattern and head up, and it's kind of a flush. Now, remember, lots of times when a pattern breaks down and there's a news event around that pattern. Remember, yesterday we had that big breakdown, and it had all that news, and the market was down. And that's usually, when that happens and you're on a trend line, that breaks down those patterns. But those patterns usually come back in line as the news gets absorbed and the market tries to correct itself. So that might be one of the situations. Either way, we have two kind of like tight little trend lines here. We have a nice downward channel here that's pretty tight. I mean, this, you can see it on the daily. We can break it down to 60. You'll even see it's kind of a better 60-minute chart. But basically, you're looking at a tighter channel coming down to the lower part of this channel off the 200-period moving average, and it's completely embedded on the daily stochastics. And the 60-minute time frame, again, here you can see a better example of that. I think we could probably adjust this a little bit more, kind of just make it a little bit more interesting. We can even make this into a small little wedge pattern too. But the fact is, we're down here in this tight pattern. Typically breaks up. We're down here in the lower tight pattern. We just had a 60-minute kind of almost a coiled up 60-minute, and we haven't even broken out of that yet. So I think over the next couple of days, next couple of trading sessions, that would equal to next week that we have, if not a pullback down and a breakout. We're very close to getting an upside move here. So it feels really good being down here in this weakness, and this is what it looks like on the trade setup. We're already active on this, and again, it actually looks quite good. It just needs to get up to our buy zone. Again, there's an upward trend line that we broke down through, 200-period moving average. Everything here pointed to a retracement back up there. Everything looks great on this. One of the best bets going into next week. And of course, the Darden's restaurant. We were right on top of this one. Same situation here. bigger channel, but this one held inside the channel, really completing what we call an X marks the spot buy zone. I've been posting this one the last couple days in the room and taking the position in it. And today we got the big move in it, and it looks great. Going in, the volume was pretty good. We definitely broke out. We took out the previous 3 days range, and we came right off of that trend line. So everything looking pretty good. The 60-minute time frame is always the first concern, though. And for every bounce that we get on the 60 in this downward trend line, there's an opportunity for this to kind of roll over and continue to trend. So that's always going to be an issue. And you know what's going to happen with that? We're going to get to a point. So, you know, at one point, just want to go back on that. At one point, you are going to get a break of this, and that 60 minutes is going to kind of embed itself, or we're not going to get a full rotation there, or we might get a little pullback where we're not going to make a new low. And this is where we start to measure this stock out. So, you know, the question today was, right at the close, near the close of the day, was, is it a good time to take off Darden Restaurants? And I kind of referred to that 60-minute time frame as that, you know, what type of trader are you? Are you a short-term trader, is super disciplined, understands the concept of trending markets, and understands that when a signal is given, you know, and it's been given multiple times before, and it's been setting up, are you going to take that off the table there with a little profit, or are you going to gamble? And it's okay to gamble if you understand that, all right, is it the right place to gamble? And I want to say it is the right place to gamble because this is an X marks the spot high probability zone. And if this is going to embed on the 60, it's going to happen at this point. This is the area you want everything to start moving back up. So, you know, that is looking pretty good. Darden restaurant recently in the news with the sale of the Red Lobster, and you know, definitely some negative action on this. But look at this. I mean, do you feel good about this? Definitely feels really good. Right in that zone. This is what it looks like on the HPS setups. Let me get that for you. All right, you can see this one out, you know, right at this level, right at the trend line, active in the buy zone, 43.80 to 43. Click on that to see the action today, and boom, you can see we come right off of that level. I mean, that is what you want to be alerted to, right? I mean, if you're going to be trading, you know, all you want is say, all right, Johnny, find this, you know, Darden Restaurants, great quality name. You know it's going to be, you know, once you start to see the pullback and you could, you know, put it in perspective to other trend lines and stuff, it just becomes scientific in nature that you're going to have a really good odds of a reaction. And that's what you want, right? I mean, that's what I want. That's what I, you know, continue to search for. So, I mean, this looks great. I don't think we're going to have an issue with this one hitting our target, especially on EAT also. Let's take a look at the next best bet for next week. All right, here it is. This is my this is last week's beard trade, and I have to tell you, what a fun trip it was with the beard trade. I told you if a best bet for the week did not hit its profit potential in the 5-day period, I would shave my beard. Dunkin' Donuts did not do that. I am extremely bullish on Dunkin' Donuts as of today, though, and it, you know, but you know what? It was tough. It was a tough call. I did expect this channel to break to the upside. What happened is we did have some bad news come into the market. Didn't really affect the stock so much because yesterday we had a big options buyer to really spike some interest in the stock. And today, well, with the downgrade, like I always say, you find a great quality name and they downgrade it into a support level. This is really a combination HPS area. This is what we call an X marks the spot with a trend, with a retracement. So you have this channel here and this bigger channel here, and you see these two trend lines Xing out here. Plus you have this other underlying trend line right here. So it's actually 3 trend lines. And the only other place we've actually noticed that recently was in Deere. You know, Deere had a very similar 3-channel line, and it's a very rare occasion you get this type of setup. And when you have those three trend lines converging in one spot, it becomes such a powerful place. And from that point on, look at the volume, look at the candlestick, look at everything on here. Cannot, you know, just tell you how good this looks right now. So kind of added to that today, and a pretty good alert went out saying that this one is at the lows, and added to it, and I think a lot of people got into this. And even though it didn't hit its profit potential for the week, I am going to shave my beard because it didn't work out, and you know, just got to do it, or what's the sense of talking about it, right? No one's going to believe it. But I got to do it. So I'll do that probably Monday, You know, just remind me. Monday, I'll do it. So this was the alert. And, you know, this was actually on the 60-minute time frame here, so it looks a little bit bigger. You're going to see the stop got just tagged today by a couple pennies. And you will see that this did break down a little, so let's just activate this here. And we came right down to that trend line. Came right down to it. I mean, touched it by a penny. I think it was a penny. We touched it right to the penny. And then bounced back up. Overall, this pattern now is set to move back up. It is what it is. The fact is, I like it so much I still hold in my position. I added to it today. So I definitely think that we have this profit zone right up here. We're going to continue to keep this one active. So I want to go into the trade alert box, or the trade alert program here. We're going to reactivate this as a trigger, and that the stop will still be set at 43. And the profit zone will still be here at 45. It's a perfect setup. It just got caught in this little flush. I think it's a conspiracy, honestly. I think I talked about the beard too much that eventually there was the powers that be decided to teach me a lesson. And you know what? That's fine. Lesson learned. I won't tempt you with another beard trade. So what are we going to do instead? Anyway, that's the trade. That's the setup for this week. That's 3 best bets going in, all in the food sector. So that's kind of the restaurant sector. All in the restaurant. That's another good thing, because now we're going to see a rotation in the restaurant sector. A rotation meaning you start to see money flow out of it, and then you see money flow back into it. This is a perfect opportunity for the money to flow back into all these stocks, and Dunkin' Donuts is going to lead the way higher. Love it. I discussed Children's Place throughout the week. Throughout the week I discussed this, and I didn't have the confidence to get in this one. For whatever reason, I just never saw a big performing stock, but I've been in this store before, and I realized it's really a nice 1, 2, 3 channel, and look at the, whenever we have those candles that come down, it's really important to pay attention to big candles. They're usually markers. I call these markers. I mean, this one's going to add up to this one, this one's going to add up to that one. And you come down to a level, it's just obvious that you're going to probably see something here. And it did. It performed, So I'm just going to even though I did not take this trade, it's good to find out, follow these type of setups, because over time you're going to say, wow, continue to see this type of breakout, the rotation. John talks about what we call a channel breakout, stochastic rotation. And when that rotation comes back, really puts in that, and when it comes back oversold at the same point of a trend line, it's really an HPS setup, and it's one of the playbook plays. Just a fast mention on Costco. It's on my watch list. I expect this flag to break higher. It's not on the HPS watch list because the 60 minutes kind of extended now. And the daily is kind of turned over. We really don't have that extremes that we're looking for. But just looking at this and knowing Costco and trading it before, looks like a very healthy flag that's forming. It's holding 20. This is a very slight move down. It's probably going to curl back up and start to get embedded here. So this flag probably has a good shot of breaking out early next week, especially if the market pushes higher early next week. We'll definitely get this one to move back up. And you remember we talk about these important pivot areas that keep on showing up. That one combined with that one kind of puts in this trend line up here, and that would be a great target for this. So a decent upside target, and definitely could see this one moving up to that level. And remember, the 60 minutes overextended, but doesn't mean we don't like it here. It looks really nice. At one point, Lululemon's going to be a good buy. Not yet. I'm not ready. Next. Interesting setup in Express Scripts. You can take a look at that daily. There's a little trend line right there. Why am I? All right, we go all the way out here. Starting in November, you're pretty much going through that pivot area down there. It's hard, It's more interesting than this kind of a wedge pattern pullback on the lower level of this level. Possible double bottom here too. There's a couple things that are lining up here, so I wanted to bring it to your attention. I don't see myself taking this trade at all. Cellogen. When I do scans and I'm just doing a visual scan to a stock that doesn't have any patterns, the first thing I'm looking for is the overall trend and the stochastics and things. But you start to look at big moves down, a big move back up. You start to put together these pivot areas, and once you start to see those pivots play out, you know, if you're looking for some levels to watch, you know, you should just start dropping those trend lines in there. These things start to line up really good, so you can actually see this is looking a lot like a flag. And this is all starting from this 1, 2, 3 pattern up here. It's a pretty decent 1, 2, 3 pattern. 1 pivot, 2 pivot, 3 pivot. Came back down there. Of course, we've seen that at this point, we're not able to get a bounce off of this level yet. And the 60-minute here, clear channel, kind of extended on the 60. But I'd watch this. You know, again, another situation where you're starting to see at the beginning of a flag. Even if we move up and move back down, I'd continue to watch this as a flag breakout. Because Verizon has been on the watch list many times, and we've recently traded this one out of the flag, I wanted to point out our measured move is hit. Measured move out of this, or measured the target basically out of this this flag would be that retracement. And there was a decent trend line underneath us. Whenever you have a really established trend line, it actually plays out in both sides, on the downside and on the upside. And you can see we tested it here, and this is the second time we tested it. We already got a nice kind of nice reaction off of that. And again, that came with the market selling off pretty aggressively yesterday. Got us oversold, and we had a nice bounce, and we're pushing back up. No call on this right now, but just, again, a good example of, even in this case, where we see that retracement. And always that same type of setup. When you have a trend line and a stochastic alignment, be it overbought or oversold, you have to consider that. And when you have an identifiable channel or a pattern, you know, that adds to it. So it's just a nice look at that chart. An update on staples. A cheaper stock, but that lane divergence in this coil up stochastic continues to say upside bounce. Again, normally I don't get involved in these cheap ones. And well, you know, I want to see this thing move. I would almost consider selling it, you know, or just dropping my positions in half, so I'm not just constantly watching it. But it does look like it's still set up here, but there's no guarantee on this one. There's no real high probability setup. Cheap price, a little more dangerous. MT is the other one, cheaper one. And this one seems to be holding up pretty good off of this in this channel. Stochastics continue to have this slight rise to them. That's usually very bullish. If we do get a pop up on Monday or Tuesday, expect this to gap up out of this. You know, this would be a nice candidate to gap up, maybe back up towards the 200 period moving average. It's not that far, about 50 cents. And, you know, that's a potential. I always like to, you know, kind of guess at these potentially moving, or, you know, moves that could come in this in the market like this. You know, I got to bring out McDonald's here for a second, because, you know, talk about McDonald's. It's one of the best charting stocks. Very organized, great pivot areas, great trends, great stochastics. Everything about this looks good. Here's a good example. This trend in this thing, guys, kind of goes parabolic on a big, strong wedge pattern. But the coiled wedge here timed the top here as we got to a coil there. That's just an interesting setup I'm seeing right now. This is what I'm always looking for, the tightening of the pattern into, you know, like this, and seeing that coil up there. It's usually a good timing indication of when it's going to pull back. Anyway, you're looking at a good pivot area up here, good pivot area here, good pivot area here, and we're just off of it right here. Plus the 200 period moving average. Just a beautiful setup here. Just looks like it. Looks like a textbook setup. Now, am I going to take this? Again, maybe a restaurant stock here. So you have a lot of things. We have restaurants to pick from. I kind of like that Brinker. McDonald's is not bad. I mean, I want to leave it out there for you guys to decide. All these are kind of interesting. The Darden restaurants, you know, all these are best bets, and these are basically all very similar patterns. So it's a sector thing, and it's not a bad thing for these, but at least they're all set up to move higher. I believe Rex brought this one to my attention. I didn't get to him to thank him because it was already after market, and I was looking at it. I said, wow, what a great channel. I've never traded this one before, and that's normally the only thing that would keep me out of a great setup like this is I'm just not familiar with the stock. It's an oil and gas stock. There's a lot of these energy stocks out there, and they're, you know, I'm not the, you You know, I want to know something about the stock, the fundamentals. I can tell you right now, this looks like a dynamite setup. I mean, there's 2 pivot areas underneath this here, perfect 2 pivot areas. We're right on it. It's really an X marks the spot. You know, convince me this is a good. I could, you know, what I would do here is go through the process of typing this into my different analyst feeds and getting a readout of what some of the analysts are looking at. See what the recent earnings were. See what else is any kind of news here. So natural gas long-term bullish view. Details for ET Rice, UPL. UPL initiated with a hold. This is out of Prime Executions. It sounds bogus.